Is the market crashing? Is this something that keeps you up at night? Well, today I'm going to talk about the market and what the dynamics are about this market that might be different from markets in the past. This is Alex Rivlin with the Rivlin Group, and we're going to talk today about exactly that. Is the market crashing? Now, I'm going to say clearly the market's not crashing. As a matter of fact, there's a supply-demand issue, there's low inventory, people are clamoring, and they're actually paying over list price in many cases. So we know that the market's not crashing, but will the market crash? Well, a lot of people look at it and say, it's a bubble. Look at how fast it's going up. It reminds them of 2003, 4, 5, and 6, right before the major crash of 7, 8, all the way through 11. We've got to look at a few different dynamics that are completely different than the last time. First is lending practices. Back last decade or a couple decades ago, we had very, very loose lending practices. They were lending to people based on no documentation whatsoever. It wasn't just stated income. Stated income says, this is how much I make, but let me prove it to you with tax returns without W-2s. But they were actually doing no documentation income. I make $100,000. Okay, here's your loan. That was really it. It was absolutely unbelievable. They also had these things called option arms, which were negative equity loans, where you had the option to just pay 1% of the entire price of the home on an annualized basis. So you have a $500,000 home, it's $5,000, it's $400 and change a month, plus your property taxes and insurance. So it was a very, very inexpensive loan. Now, it was at, say, a 4.5% or a 5% rate, and that extra percentage of the rate went on to the balance of the loan. So you borrowed $500,000. Well, after a certain number of months, it was 502, 505, 510, 520, and those capped out typically at about 15%. So you could ultimately owe $575,000 on this house that you bought for $500,000. And by that time, as the market's crashing, you had no equity. There was no way to sell. So those really, really loose lending practices led to the calamity that we saw. So the second point that we have is the actual equity position in homes today. So because of the tighter lending practices and the way the market has been inflating over the last several years, there is more equity than ever in homes. What that means is even for people in trouble, even for people that went into a forbearance as a result of COVID and what's been going on for the last year, they have an opportunity to still sell their home, pay the fees, and get out with money in their pocket, or at least get out at a break even. So the idea of foreclosures and short sales is much less risky than it was previously that we saw in the last crash. Now, does that mean there's going to be no foreclosures or short sales? Certainly not. There will be. There are people that bought with a down payment assistance program or bought on the minimum 3.5% down. However, that is the minority, not the majority. Now, one other thing to think about in regards to a correction is there's risks all around us right now. The government has printed more money in the last year than it has pretty much the history as we know it. All of this economic stimulus and quantitative easing has led to the potential for another risk factor, which is inflation or even hyperinflation. If you read what some of the economists say, this is a major concern. So what should that mean to you? Well, what that means is, in an exaggerated example, if a loaf of bread right now is $3, and that loaf of bread here in a couple of years was $4.50, well, you would want to see that related to the housing market, where a house that was $300,000 is now worth $450,000. And wages that were $10 an hour are now $15 an hour. Things of that nature for it to all be relative, and that would create that inflation. Well, let's say there is a housing market correction, and that correction is, let's say, 20%. Well, now that $300,000 that would have gone to $450,000 is reduced by 20% of that $450,000 or $90,000, leaving that house at $360,000. So if you happen to have $300,000 in your safe at home and you were thinking about buying a home right now, and you could buy it for $300,000, but you're worried about that crash, and we happen to have some inflation, you're still gonna take that $300,000 out and be short $60,000, even after a 20% correction. So think about that. Now let me ask you this. What's the risk of housing market correction or crash, and what's the risk of inflation? Well, depending on who you speak to, those risks are about equal. So they could both happen, neither of them could happen, or one of them could happen and the other one doesn't. So the only risk to you is if indeed the housing market does correct or crash and inflation doesn't happen at all, then you could see yourself in a scenario where your house is worth less than you're buying it. Then you got to throw in one more factor. How long are you planning on staying in your house? Because if you bought your house in 2007, 2008, and you were comfortable with the payment and you love the house and you stayed in it, in all areas of the country now, we have now crested back over the values that they crashed from. So as long as you're staying in the home long enough, and in most areas it was only about 6 or 7 years from the bottom to come all the way back up, you're going to be safe with regards to that. If you're looking for a home right now and you're hesitating as a result of wondering or worrying if the market's gonna crash, I'd say think about all the factors that are different now than they were then, and think about the factors that are still happening now that could offset those different potentials for a crash or a correction, and make that decision based on all of the educated elements that exist now. If you like what I've brought on this channel, please click below to subscribe and come back and see more of our great videos. So this is Alex at the Rivlin Group. I hope you enjoyed this video and please come back and see more. We know Henderson.